Well, welcome back, Maverick traders, to the trading room. Missed you last week because of the holiday. Hopefully you guys had a great Thanksgiving holiday. I know I did. It was a little faster than I wanted it to be, but I'm kind of excited to get back to these markets because we've only got a month left, right? Think about that. We've only got a month left. I've got some ideas. There are actually some old trades that are still working out pretty good, so I'm going to share them with you once again. So take responsibility for the outcome. You guys understand the drill. And let's get moving. So my recap isn't very deep, and the reason being is because it's been about a week since I've been in the markets, which is really cool because you can usually take a step away from the markets, come back, and address them a little bit more clear, a little bit with a little bit more less bias, I should say. So we did get a pretty aggressive move right back to support levels, and it's interesting because if you take a look at the shortened holiday week, which we will here in a second, it was a pretty good bullish move. Most of the time you do get these Santa Claus rallies, October rallies. We got a really good October rally, that's for sure. And even this little shortened Thanksgiving move to the upside. But it was quickly erased and we're right back to the levels that we started at. Sentiment, on the other hand, is calm. I couldn't think of another way to kind of bring it up because we're not bullish. We're technically still in a pretty bear pattern overall in the longer term. But calm is good because no one's rushing out to buy anything or try to catch the falling knife, and we are still seeing consistent selling in some of those overblown larger stocks. A couple will look today, ARK and Amazon specifically. But the volatility is just dying. It's falling apart. So there's still a little bit of buying here, a little bit of selling there, but there's not a lot of worry or activity. Corey brought up a really good point yesterday on his end of day, kind of reiterating that we are in the last month of the year, so selling something right here doesn't make a lot of sense, or putting your money to work doesn't make a lot of sense either. It's just you're not going to gain too much. You might get this little last-ditch effort, I think, maybe before that last holiday, before we start the beginning of the year, but I think it's going to be more towards the bottom here. Economic data. Powell to speak today. We're seeing some mixed numbers. And I've had the discussion with some of the boys around the office because I saw a pretty amazingly high home sales number. And I'm pretty sure that's delayed. And it could be that last-ditch effort before rates get too high. But then we see a consumer that's super active, but then we've got a horrible manufacturing number. So I'm wondering, okay, if none of this stuff is adding up, and Darren himself on Sunday, or the weekend class said, it's a little confusing. He can't really tell what's going on. Inflation to him isn't really that big of a deal anymore, but some of the numbers that we're seeing out there are a little bit weird. So I'm thinking this could be that transitory behavior. The impact that the Fed has, interest rates being increased. We're seeing the laggers come later, but we're seeing the leading indicators already changing. We've seen that employment is high, but the ADP number, you'll see here, guys, in a second, was low. So we're not adding new jobs, but we're not losing them either. All right, enough. Let's get into some of the trades that I had over the last couple of weeks. And so I went through the last couple of midweek updates knowing that I had taken a break. And I went through some of the stuff that we had been looking at. Moved some stuff around from bullish to neutral and some neutral to bearish. Is I think is what I've done. But a lot of these we've had week to week to week, and they're still looking good. Now, I've got only a few to look at, but here's that list. If you guys want to take a look at it, let's jump into the first one. This is AKRO Therapeutics. We discussed this as a sideways to up, and it's absolutely perfect. It's doing exactly what we want it to do as far as a sideways to up trade. It's consolidating up a certain area here. If you're a diagonal spread guy, this looks great. Calendar spreads worked. Butterflies still work. I think they're really neat. Now, I debated putting this one on the sideways because you'll see Starbucks here in a second looks very, very similar. But this one seems to be moving a little bit higher, and based on it's a little bit more volatile with its biotechnology and healthcare, that it could continue to push. Now, Starbucks, being a consumer, it's going to be steady. Had really good numbers, gapped up. I'll get there in a minute. But you'll see the patterns are very similar, so you can play them either way you want. What I did like about this one, though, is it is seeming to bleed a little higher. 45 is where it's comfortable. Taking a look at some of the shadows that it's put up over the last few days, it really hasn't gone anywhere but sideways with the markets correcting. Keep that in the back of your heads. Las Vegas Sands, pretty interesting. I think it was really cool that it had that pivot point a few days ago. I like that it, kind of tested this 42 level. The slope of that 20-day is pretty aggressive. This just had a big move to the upside. It was very volatile, to say the least. It just pushed and pushed and pushed. And so the expectations for whatever Las Vegas Sands is up to is bullish. Maybe thinking travel's going to be higher than people think. I'm not sure. You guys can elaborate as much as you want. But what I do like about it is today's action might feel a little extended. Maybe you wait for this to consolidate or pull back, but being comfortably above that 43.5 mark seems like a pretty decent trade if you want to play something sideways to up. I'm going to go ahead and just show my hand here. We'll get to it in a second, but I just see a lot of consolidation coming forward over the next month. I've seen it many, 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 many times over many years. So my bias is going to be anything that's going to move higher should kind of bleed higher outside of any sort of impact news-wise. Let's get to the last bull here. This is ASO, Academy Sports and Outdoors. I like this because it looks like it is a beautiful bull pullback that wants to confirm. So it's early yet. I debated showing you. Most of the time, guys, I like to see things that are actually triggering before I share it with this class. But hey, why don't we get in front of this thing and see what it can do if it wants to find a place to sit right around where this day opened and the high of this previous day here. You might want to give this something down to about the 48 mark. So it's got $2 to consolidate or pull back or establish a pivot point. But I just love the uniform pullback after a really good move to the upside here. And this volume was pretty steady. Dropped off a little bit as it's been pulling back. So definitely glass half full in this bear move, if you will. I love the doji today. I'd like to see it finish. If I could get a move back up here and confirm to the upside, you got a short-term target, quick target, considering what this has done. When it does move higher, it's usually pretty fast and pretty aggressive. So I wouldn't keep it much more than mid-December, maybe 2 weeks, 3 weeks at most. But if you want to just go straight calls in this seat, with a short-term target at 52 might be kind of fun. Just if you guys want to trade. Now, there's a lot of you out there that I've talked to. Let's move over to the next here. This is the sideways stuff. This is Toll Brothers, right? Home builders. A lot of traders that I've been talking to lately have been a little leery to actually even push a button over the last holiday weekend, moving into the end of the year. That's totally fine. This could be something as easy as let's go ahead and put on something sideways to up into January. I'm okay with that. I really am. Taking almost an investor's approach, something longer term sideways to up. Now, if we do get something bad in the news and things fall apart, well, we could always roll out bears pretty quickly. So, all right, Toll Brothers. I moved it to sideways. It was looking pretty good on an ascending triangle pattern. You could see that it beat this October pivot point, but I think it chomps around here. I'm not sure if it's going to roll back over. I mean, that was a pretty good oversold bounce that we saw coming out of mid-October there. And hey, we know that home builders are slowing down. We know construction slowing down. We know all that's happening. I did see that huge pop in new home home sales, but that could be just a flash in the pan. But if things stay sideways, if Powell comes out, he's going to talk today. We'll talk about that in a minute. And says, "Hey, I'm okay with inflation. It's other things I'm worried about." Well, then this won't get that hurt. I mean, it could sustain itself and move sideways from here. So sideways, cool. I wouldn't do anything longer term, but at least shorter term, if it's going to try to stay above that rising 20-day moving average, that could be awesome. Here's Mosaic. This one has been a push-pull or back-and-forth trade for a while. It still has that ascending triangle pattern. I've spoken to many of you that have actually tried to trade this trade, whether it's a diagonal or a vertical spread, and sometimes they work out and sometimes they don't. It's just your timing. The overall thing to continue to focus on, and I'll do it again, are these levels. There we go. There is a range here that this has pretty much followed for, since it broke down late September. And it's been within that. So sideways from here is great. If you want to stay wide, that's fine. This is a pretty volatile stocks. So anybody that's trying to nail this thing within a dollar or two, it's going to be pretty difficult, and timing is going to have a lot to do with it. But I do still like it. It's still holding in as a sideways trade. Starbucks moved this from the bull to the sideways, and you take a look at it. Like I was saying a little earlier, it's like, well, geez, why did you do that? Well, I like it. I think as a stock, it looks pretty good. Technically, it's moved higher. The volume's kind of gotten quiet. It's one of those stocks where, is this a portfolio stock? Is this something that a hedge fund manager can sell over and over and over again? And the answer is yes. It's a company people are comfortable with. It just came out with really good numbers. It seems to do pretty well business-wise. So I don't see this thing taking off or being acquired into the end of the year, but I don't see it really selling off either. So that's why I kind of moved it over to the sideways stuff. I do like it bullishly. I do like it sideways, but if you guys want to play something between 95 and 100, or if that's a little too wide, play something up around the 100 level. A calendar spread might be kind of fun into the end of the year if it has that ability. Cool. All right. So it is bullish. I like it bullish, but I thought sideways might play out a little bit, at least going through the end of December. Let's move on to the bears. These are a little bit obvious, things that have been beaten down a little bit. Here's ARK. ARK didn't quite break down. I believe last time I talked about this, I was wondering if it was going to kind of do a head and shoulders pattern and fall apart. It almost pivoted and moved back up, but it's still sticking close to its descending 20 and 50-day moving average. So the last few days are very promising for this. If you wanted to get something a little bit more aggressive, thinking that we might get another push to the downside towards the end of the year, maybe Powell says something that the markets don't like. There's some crypto worries out there. Boy, I think we've just scratched off the tip of the iceberg personally on some of the stuff that could fall. But once again, we're just looking for something that could be negative, and if it's bad enough, this might just roll down. Understand that ARK does represent some of those stay-at-home stocks. It did really well, and some of these stocks they're decent, but they're still selling off slowly. They're bleeding off, and this could continue to do so. So sideways to down on ARK. I hope you guys are picking up that most of my stuff is sideways to down. I'm not expecting anything to fall apart or jump up to the moon and stay there. That is for sure. Here's Amazon. It's been bleeding a little bit lower. It's below its 20-day moving average. It's got a very similar pattern to what we just saw. Wait for it to maybe break that 92 with some sort of conviction. You got a short-term target here of, boy, that's 85. So it can drop pretty quick, pretty fast. Just depends on where you're at with it and what you're thinking. So that is where I'm sitting with Amazon. Let's move to the last one, and this is Coinbase Global. It slipped below the its $50 level, and I was expecting a pretty good move. You guys could see all the way back here. I was really, I guess you could say, hoping for, especially if it's on my watch list. When it came back up to this area, it didn't even stay. I thought for sure once we got here that we were going to be somewhere in the 30s, and it didn't. It hung on, and that's fine. This just kind of reinforced my whole approach this class, obviously, of sideways. Things just aren't going to fall apart. And I looked at the VIX. The VIX isn't panicking. However, I'm not seeing a bullish trader out there. I'm not seeing a market to where, let's go ahead and buy all this stuff off the bottom and see what happens next year. It's really gotten kind of calm, and that's kind of why I use that terminology. So I do like it on the bear side. I don't think it's going to hit 30 anytime soon without some sort of event. But a nice slow bleed down to 40? Sure. Okay. Let's get into the market analysis. So, what am I talking about? Well, over to the right, I thought this was very interesting. This is the week so far. So I've just done Monday, Tuesday, Wednesday, and all the markets are pretty equal. Diamonds, spiders, and the Qs, 1.25%. Just over with the Qs, but it was a pretty uniform sell-off coming out of a pretty euphoric move over the shortened holiday week. This is common. Traders come back to work and they realize, you know what? I don't have to get rid of my whole position, but I could take some profits on this move we had. The upside puts it right back to support levels, and I'll draw those here in a second. Russell, a little bit lower than 1.25%, just shy of 2. Oil had a substantial bounce off a pretty good move to the downside the week before, previous week before, and gold just hasn't done anything. It's, well, I don't know what you call it, but it's not doing anything for us so far or recently. So let's get to the SPY and draw some lines because this is what I'm talking about. I believe that we could establish a range here, and this range could carry us all the way through the end of the year. That's my opinion based on 3 days of trading coming out of a holiday. Now, what I'm focused on is this was your holiday move, right? What was that 3.5 days? So we had Thursday off, Monday, Tuesday, Wednesday, and a half day Friday. So 3.5 days of trading, and it was quickly erased over the last 3 days. So let me draw that line. So you can see we're right back to where we were Monday of the holiday week. That's common. Now, one thing that's really something to point out is the decrease in volume. This is common for a few reasons. We came out of a holiday. We're going to go into another holiday in a couple of weeks in the end of the year. So, is there anything that could move these markets outside this range? And I don't know if it makes much sense to add to what Corey was talking about yesterday when it comes to taxes, when it comes to window dressing. I think any sort of window dressing has already been done. Personally, folks, I believe that all happened here. Fears of increased interest rates or something outside of expected moves with the Fed calming down. We'll see when it comes to any sort of pandemic. Knock on wood, I'm over those, or something that's going to go on in the crypto world, unless that's completely disconnected with the rest of the markets. So we could find ourselves settling down here, and if that happens, there could be a lot of opportunities to make money sideways. All right, so I used the SPY for my breakdown. Let's get to the diamonds here. This one it does have the same pattern. If you guys take a look at this Monday to the shortened holiday week and the pullback back to where it started, it's still that same week-to-week pattern. However, it's substantially different when it comes to its overall trend. It's still strong, but we could call that a short-term resistance. And if I, yes, folks, go all the way back to June, I can create a range just above that 20 or just below that 20-day moving average. So even the Dow could try to be establishing a range here. All right, moving on to the Qs. I kept my lines up to see if it would match up, and it didn't. So the Qs is going to have the same range. I've got a crossover here at the 20 and the 50, so it's a little bit more ominous, a little bit more bearish. It does have a descending triangle pattern going on, but this support here is at 280 is pretty strong. We've seen it just play above it a couple of times. We've seen it touch it a few times, and here we are consolidating it again. So I even think that the Qs does have the argument to range bound as well. Let me go ahead and do one more thing here because I wanted to pull it off of, there we go. So support level there. Support level here. You guys can see this move in the back area. So there's that range at the 290 for resistance, and then support. I'm going to take this one, and here's another bounce here. There you go. So we've got 3 ranges. Now, sure, if we continue the pattern of weakness and strength when it comes to the sectors, then the Qs could definitely bleed off towards the 270 mark. I'm fine with that. It could happen. The SPY stays sideways, and the diamonds maybe bleed higher up to their resistance. That would probably make the most sense if there is no sort of economic impact or news or anything that scared or freaked these markets out. Now, that can change, I do believe, if you get a Fed that says anything optimistic, right? So let me go ahead and switch a little bit of gears here as we get into the economic calendar. Anything optimistic. And what I mean by that is, hey, let's go ahead and take the foot off the accelerator. It creates confidence enough for these markets to go ahead and buy all those speculative stocks. That's kind of where this attitude is right now. We're calm, we're relaxed, we're tired of fear. Any sort of good news, I might throw, a few $1 million at Amazon. See what happens in 2023-24, right? That's a joke, folks. I wouldn't do it personally. I'm just using it as an example. So I would not be surprised to see a market react more to bullish news than bearish. There's my opinion. So let's get into some of these numbers. The housing numbers is gone. I shared that with you guys on Monday for the end of day, but we've got a consumer confidence that's pretty much in line, but it did drop from previous levels. So home prices are dropping. We see this here. The expectations are dropping, but not as hard. Here's a little bit of a bounce. I believe that's kind of oversold. The housing market, to me, is going to be a little bit more volatile because that could be that transitory reactionary move that I'm thinking about when it comes to these economic numbers. This one caught me off guard this morning, folks. I'm not going to lie. So this is going in the correct direction when it comes to curbing inflation. But we need to see, and I believe that's coming up here on the next slide, unemployment numbers also increase at the same time. So we're a little hot, and Powell himself said, I'd like to see the job market calm down a little bit. I'm not getting that. Well, jobs being added has. Let's move on to what's going on, or what we can expect here coming up next. We have the PCE numbers. We made mention of this the end of day post yesterday. And we have the non-farm payrolls. Now these numbers are also inflationary, and they could show a little bit of decreasing heat, I should say, in what the economy just isn't slowing down quite a bit. So we'll see where we go from there. I do think that we do a little bit based on what Powell says today. He's probably talking right now, but I don't know how long this move's going to last. In fact, I don't know how long any sort or pieces of news is going to last. These markets have pushed and pulled. Rob talked about that on the weekend class, saying, look, huge move to the upside, came back, did nothing. Huge move to the downside, came back, closed flat. So a lot of volatility that seems to go nowhere. I truly think that continues, even with good or bad news out there. If there's no news, it's going to be super boring. All right, let's poll the class. You guys are probably so bored of just looking at my slides here. So let's launch this. I want you guys to share what you think you're seeing out there. It's difficult. It is. This is a difficult class to teach. Every time I come out of a holiday weekend, or especially when we don't have this class, it's hard to kind of pick up and start over. Almost is how I feel. But so good. All right. Well, we got some opinions out there based on this poll. We're moving along pretty nice. Got about 93% voted. Pretty much ending up where I thought you would. All right. Okay, we stalled out. For you guys watching this recorded, you can see that we're already done. And for you guys not, let me go ahead and share this poll. So we have 71% at a 0, 50% at +1, 36% -1. For those people that vote, you understand that you can choose more than one. That's why I do it. So slightly a +1, but majority, we can call it pretty much flat, pretty much a 0. And guess what? That's exactly where I'm at. We're above the 20, above the 50, 20-50 slope. Everything's showing me my top-down approach. I should be a +1. The biggest hiccup for me was the explanation I gave you guys on the spiders. Range bound, nothing really looking forward to, or nothing I can really see in the markets that would justify a move up or down, especially with only about 30 trading days left in the year, taking out the holiday. So I'm a 0, flat 0, and that's the monthly outlook and that's the weekly outlook. But we can make money with 0. You guys saw those charts we looked at, and if you guys want to share with me, please do, because we can make some sideways money. Targeted butterflies, sideways stuff, butterflies, calendar spreads, all sorts of good things. Let's move into our weekly performance. Now, this is from previous Wednesday to Wednesday, and we didn't get a lot of action because we were closed on Thursday. But look at the jump in consumer cyclical. I thought that was interesting. Now, could this be anticipation of a Santa Claus rally, or it is the Santa Claus rally? Oh, well, I want to buy some of these stocks that are going to do well, and they're going to report good news, good earnings in the first quarter of next year, or I should say fourth quarter of this year, which will be next year announcement. That happens. It's very often. It's called the Santa Claus rally. We did have a very active consumer over Black Friday, some of the highest sales that we've seen for a long time. Maybe that has a lot to do with the fact we came out of a pandemic for the last 2 years. I don't know, but the consumer's consuming. Technology, on the other hand, big drop, continuing to sell off. Those high flyers still have a whole lot of meat on that bone. So I don't know if that's going to stop anytime soon. Let's take a look at the charts. Now, with the consumer cyclical, I always use IYC just because it's a discretionary. The other one, that the XLP, is staples. So it's not even really looking that good, but what it is just not falling apart as much as some of the others. I also believe this will consolidate. I think this is a really good candidate for sideways, just based on its chart. Let's go to tech. Tech's bearish, and it's just come off a little bit harder than most. This has had a pretty good move to the upside, hit that resistance at 135. Let me go ahead and get a line on this. But it dropped a lot more aggressive than the rest of the markets. Remember, we had this move to the holiday week, and this is the one back to neutrality, and it's actually a little bit lower. Now, it hasn't broken anything yet, but if it can start to move below that 127.5, 128 line with any conviction, we might have another round of selling in tech. It's going to be very difficult because I just don't see the urgency to sell or buy anything. All right, let's move on to our conclusion. So with only about a month left in 2022, look for the markets to establish a range. I drew some lines. You guys might draw some different ones. I do like a bear rally and a bull rally, or a bull move in a bearish trend. Corey pointed that out nicely in the roundup yesterday. So we still could be, what would create sideways over the next 2, 3, 4 weeks, right? So it just depends on where you're looking for it. So the bear market is still in place, but there is complacency out there. We could see reactionary moves, but I don't think they go anywhere. I think we push higher above resistance areas. In fact, Corey's actually looking for a move higher for the rest of the week and then stopping and maybe pulling back. I could see Powell say something here in the next hour that really makes the markets mad. They gap down and then they rally back up. That's kind of where I'm at least at this moment. Sentiment, comfortable. That's all I got to say. What do we got to look for? Crypto concerns, Fed pace, increasing, or if they're going to keep the gas down or if they're going to lighten up. And I truly believe, folks, if there's any sort of optimistic words in Powell, I think these markets could take off pretty quickly. Economic data is completely mixed, and I think it's transitory. When I get my numbers backwards and they don't make sense to me, it's usually because what the Fed has done is working its way through the system. So I'm seeing things that come out a little bit bearish, a little bit bullish. If they don't make any sense, that's because it's got to work its way through the system. All right, enough. Let's get out to the markets and take a look at what you're seeing. Let me open up my... There we go. I can go ahead and close this, can I? All right, there we go. Since I've been talking, looks like the market's gone a little south. I'm not sure if that has anything to do with Powell talking or the anticipation of it. You guys know how this works. So what's so great about this class, we can end it one way and by the next day it's completely backwards. Okay, let's start things off. Robert has RTX. Let's move on to RTX. Something with the 12, 16, 100 target. All right. Okay. Oh, gotta zoom in on these. Okay, let's talk about it. 100 target. Let me zoom back out so we can get a good look at that 100 target. Move it around a little bit. Okay. Sure. Yep. Sideways to up might be a great candidate. Looks like it's hesitating today. Raytheon. Yeah. We'll see what it can do. Obviously, it's moving south, but if you wanted to play something at this $100 target, right, you could do a diagonal spread somewhere between 95 and 100. Today's a little bit worrisome. Just see where it finishes, right? It would be nice to see it finish above that 20-day moving average. If you want to play something range bound, you could take it back to these support levels. You see these here? Right, where it's at, and play like a condor spread between 97. Well, it's got to come back up first. But yeah, 90, 95, 100, something like that, or a butterfly. Targeted at 100. I'm not sure what strike prices it had. 97 would be cool. 97.5. I like it. Let me write it down for sideways to bullish. Let me put it down the bull side with sideways to it because it is in an uptrend. I like it. It's above its moving averages, and it's consolidating. It's got, you guys, we can make this argument for an ascending triangle pattern here, so it looks good. Definitely glass half full. Thanks. Take a look at another one here. This is DXCM. We're in healthcare here. Bear watch list, he's saying. Okay, well, we are, remember, okay, it looks bearish with this move here. But overall, well, okay, 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 yep. Taking a look at just the overall trend of this, I would say absolutely not. However, if you're really just trying to play a closed gap, now what I'm going to do is I'm going to get rid of these lines, and zoom in and try to elaborate where I'm coming from. About right there. Now I'll put the lines back on. Descending triangle pattern. Oh, and it looks like it's almost at the low of that gap. So here is the gap range, but if you want to go technically, here's the gap right here. It's the day before the move to the upside. So a technical gap would be body to body. And since it's already kind of playing, let me squiggle this, playing with this area here as it's going down, a break down to 105, sure, I could give you that. But based on what I have here in front of you guys, it's kind of interesting, right? It's like, geez, Joe, that's an uptrend. It's above averages. Everything looks good. Everything's bullish. It just depends on your outlook on it. So what you could take a look at is if this holds and moves back up, this could be a sideways trade. Let me put DXCM on the sideways, and I'll go ahead and put a bear on it just because Robert's taking a look at, hey, something that might close its gap. It might be a bearish move. Fun. Thanks for that. All right, moving on. Dan has XLY. Just doing a butterfly. 45, 40, 35 puts. I'll learn one of these days to zoom in before I get my pin out. All right, let's make it nice and clean. All right. Okay. Yeah, sure. Put butterfly, that's just going to stay right here, he believes. And that expiration is December 9th. Since we're talking, let me see what the last expiration for the last month of 2022, well, the third Friday, right, is the 16th. Short. So we have 5 expiration cycles in December. He's looking at the second one, which is a week and a half away. The 16th, which is the middle of the month, will be the third Friday technically, but we have 2 Fridays after that. Now, what's going to be difficult, folks, as I have this R up, you guys probably need to refer to your calendar, is the markets will be closed. I think, is it Friday or is it Monday that's observed? If somebody wants to type that in, that's fine. All right. So anyways, I do like it. Yep, I like it. XLY sideways. Absolute butterfly. If you guys wanted to open it a little wider, that's fine. You wanted to target one side, that's fine. But I do like it pretty much as tight as it is. Hess. James. Let's get into it. Right. Shrink it. I'm zooming in pretty tight on these because I'm getting some butterfly numbers here. 150, 160, 170. Excuse me. Okay, targeted. All right, so I'm going to have to zoom back out a little bit. All right. Okay. Look at that. I'm just going to go ahead and zoom it to where one of my drawings works, 170. So, okay. Breakout to the upside. Sure. Sure. That's definitely super bullish. That's really bullish. Let me see. Got in last week, Tuesday, on that confirmation candle. Cool, James. Be patient with it. I would think that it would be, whoops, that's not a straight line, somewhere between here. This is where I would be, my guess. Now, if we do break out, then I would love that. Well, I want it to break out now that you're in it. But yeah, that would make more sense. So you got into it, he says, got into it last week, probably right around here. Yeah, that looks like it was about to bust for sure. Now it's holding on. That's a good sign. Depending on your expiration cycle, you just got to be patient with it. You're in the right sector, right? We know that one seems to weather a lot of storms. Okay. Thanks, James. Moving on. 2 for the watch list. MKC. Let me put Hess down Oh, I already did. MKC, nice cup and handle. And then Z-Lab. So let's start with this. Okay, yeah, sure, I can see the cup and handle. Don't want to zoom too far into it, depending on where you drew this. Ooh. Well, we could start the cup here. No, I like the big cup. Let's do that. You could do this one, or a true cup and handle would be right somewhere in here. Here's the cup, and here comes the handle. Sure. Like what I like about cup and handles is it's basically just a good bull move to the upside with a bull pullback that could pivot. And once that pivot confirms, your first target's back up to the cup or higher. Good. MKC. Put that down, and then let's move over to your second one. It was Z-Lab, right? Okay. Yeah, that was nice. Look at that crossover, higher pivot. Great. Great. Okay, yeah. Write that down. Thanks. Yeah, these are kind of fun. I like these because you got all sorts of things happening for all you technical. You guys want to nerd out, right? So you get your higher pivot, pulled back, bullish crossover, higher pivot here, higher pivot here. I could slope that whole thing. Confirmation above that. We got a target of 40. Decreasing volume on the pivot. We'll see where that follows. All sorts of signs pointing to yes for Z-Lab. Cool. Thanks, Joe. AMD. I haven't looked at that one in a while. What do we got here? December 16th, December 2nd, 70 put calendar spread. Okay. Sideways. Okay, yeah. Slightly out of the money. I'm fine with that. Awesome. Awesome. So he's playing this sideways to down to 70, but not any further, with a put calendar spread, and that is December regular expiration, which is the 16th, and December 2nd, which ends Friday. Cool. Now, let me draw the line. Straight up 70. So this is puts. He used puts, folks, not calls. If this was calls, it'd be in the money, which you could do calendar spreads in the money as well. But his idea is for this thing to stay like this, or maybe even go slightly there, stay above 70 in the next 3 days. Right? Excellent. Thanks. Let me put AMD down. I'm going to put AMD on the sideways, but I'm going to put a down arrow too because you're using puts. Because if that does expire, the 70, you have the puts, and that thing breaks down, it'd be nice to have the December 16th puts for something that goes a little bit further south. Okay, Justin, Spotify. Gotta zoom in on these. They've fallen so far. A target of 75. Target of butterfly 75, 70, 65. Okay. Yep. Yep. Yeah, I love it. Or butterfly 75, 70 put. Yes. Okay. So we got the diagonal here. Or I'll draw a butterfly on its side for you guys. There's a risk graph for you. Or the butterfly there. I'll take either. I think they're both great. And thanks for sharing. He's got, so his first one was a diagonal put December 9th, I think, for both. So, yeah. Let me put Spotify just basically bearish. This is one that just keeps bleeding lower. One of the ones that just is struggling. Stay-at-homes. Okay, Felix. Sideways on CPNG. Whoops, sorry, that's too many letters. All right. Oh, yeah, that's a good tight one right there. Sure. Yep. Like it. Let's go ahead and see what we can look at. Roughly 20. If you wanted to see if this thing can slip back down, you got 16. That's pretty wide. If you want to be something a little bit tighter, I'd be fine with 19, 20. Something like that. Well, depends on the strike prices. Maybe 20, 15. I know you're kind of making something up at that area. But you just kind of want to give it a little bit of a range, somewhere above those, around those moving averages. Let me put down sideways though. I like the performance of it. CPNG. Okay. Great. Moving on. Oh, man. I guess it has been a while since we've talked. Everybody's got all sorts of trades. RRC, diagonal or a vertical call, huh? All right, Matt, let's see. Yep. Yep, diagonal or a vertical call. 16th of December, 28.31 is the range he's talking about. Yeah, This is 28 and 31. Sure. I get behind that. This is the 3 days that we're going through right now. One thing, Matt, if you really want to wait for it to pivot. You might be a couple of days late, but if you're talking the 16th of December, you're fine. That's still comfortably 2.5 weeks past that. Wait for it to turn. Today is not the day. But if it can stay above that 28, yeah, for sure. Sideways to up. And a lot of these trades, folks, might just show themselves based on what Powell says. It's going to be interesting to see how much anticipations or how much reaction we get from traders still listening to the Fed speak. Based on what I'm seeing volatility-wise, it shouldn't be much, and he might say I'm right in line, but if he says anything outside of that, it'll be interesting to see if these markets react, and if they do, for how long. So be patient with all of these trades. You guys have time. Robert said RTX looked good 40 minutes ago. I get it. Yeah, I'm sure it did. That was the first one we looked at, folks. One of the first ones. Let me put RRC down because I do like it, Matt. Diagonal or vertical. Just be patient with it. And it is a slight bull, so I'll just put it on the bull side. All right. Brett has EU. Back to recent lows around 67. Let's take a look. Okay, yeah. It's consolidating. It's trying to stay up there. But let's make this look fun for some lines. When you stretch it out vertical, you actually can see a little bit more better, or a little better, more specifically, I should say, the support resistance levels. So this is kind of where it's gapped at. It's above that gap. It's trying to stay above it. So it's this area here that if it bleeds off of, we have that line as well, then yeah, I could see that revisit that 67. Let me definitely put that down on the bear watch. EW. Okay, I'd be patient with this one, or do something a little bit sideways in the shorter term. Thanks, Brett. All right. What do I think of PFGC? Let's see. Performance Food Group Company. Oh, nice. Okay. Consumer defensive. These seem to do pretty good, even though discretionaries are actually leading the way. This is great. Nice. High base breakout. That's basically what I think about it. PFGC. Now, how do we play it? Up to you. I'm still believing in sideways to up or sideways to down. So let me do something. When you stretch these out a little bit, and depending on the software you guys use, you can actually get wider price areas and gauge from there if you want to snap Fibonacci's. When I scrunch this down a little bit, you say, oh, I hit 65, and that might not be realistic. But when I open it up, okay, and I do like maybe a Fibonacci snap between 58 and 59, another dollar. Okay, 62 makes more sense, 63 makes more sense. So take that into consideration when you're actually analyzing a trade. I'm fine with a target up to 65 if you're going to allow it enough time to get there. However, if you want to play something slow, and I've been talking a lot about sideways in the shorter term for the next month, then we might want to play something a little tighter, maybe around 62, 62 and a half. All right, there's your free lesson for today. Or Joe's Corner, right? That's kind of how I analyze stuff. All right, so yep, I like it. It's a good bull trade. It's looking pretty strong. Nice. All right. Okay, we did it. We made it. All right, let's see what the markets are doing while I start typing stuff in for you. And I'll cut you loose. It's nice to be back. All right, let me share this with you. There it is. Okay, now I get to draw what I think is up, down, sideways from this area. RTX I liked sideways, and DXCM to the downside as well as sideways. You can target that AMD also to the downside. And I think that's it. Yeah. All right, guys. Well, awesome. Nice to be back for the holiday. We got a couple of weeks. It's going to be interesting because week 1 is already this Friday, and then we've got 2 more weeks, and then past that, then we go back on holiday breaks, right? The markets will be closed, so we really only have about 3.5 weeks of trading left, if you want to be technical. All right, folks. Thank you so much for joining me. And if you got any questions, you know how to get a hold of us. We'll talk to you next time. Bye, guys.